Hey, what's up, guys? This is Cody the Coin Rafter coming at you with another Bitcoin monthly report from ARK Invest. This is as of March 31st, and I think this report is actually more bullish than the last report that we looked at in February. So we're going to go ahead and go right into it. So the market summary, first off, they break down a large amount of Bitcoin profit taking going on here. They're saying here that the appreciation during the first quarter went all the way up to 68.6%, almost 70%. And based on the MVRV Z score, has not entered into overbought territory, so it still has more room left to run. I'll talk about that more once we get to that slide. Now, they also say that long-term holders have been taking profits, and specifically those who have held about a year or so compared to those who have held 5 years or more. Those wallets that have held for 5 years or more have actually not really been selling that much. It's just the ones that are a bit newer that have been selling and taking profits. Now, they also talk about the current market narrative being challenging. They're saying that fiat currencies, many fiat currencies are depreciating against the US dollar and gold, okay? And then they also say that they're based on the S&P 500 earnings, that is signaling economic weakness in the market. So we're going to go ahead and get right into their metrics. Now, many of these stay the same, but there are a couple that have changed here. Active owners is now bearish. Transaction volume has been downgraded to neutral. The locked supply for holder behavior has actually moved up to bullish, and the time-weighted turnover has moved up to neutral. Next, they also go to the next page of the metrics, and that is not really any changes here. We still have perpetual futures basis and expirational futures basis being bearish. Okay, now we get into the real heart of the report here, and that is going and taking a look at the next major support level. So usually ARK Invest does this where they look at the 200-day moving average, they look at the short-term holder cost basis and the on-chain mean, and they establish those as major levels of support. So what we have here is the short-term holder cost basis at 57,547. This right here is going to be fairly strong support if Bitcoin does go back below 60. You can imagine that that level right there is going to be a point at which the bulls are going to be defending, the buyers are going to be defending this area at about 57,500. The 200-day moving average, there's going to be strong support there at 43,300, and then the on-chain mean here at 41,160. So if you'll notice, a lot of these are kind of in the 40s, except for the short-term holder cost basis, which is in the 57,000 region. That, I think, it's actually possible we could see Bitcoin go to those levels and then rebound sharply. I think if anything's possible, then the short-term holder cost basis would be the level that I would look at, potentially adding some more Bitcoin to my own wallet. All right, so they also talk about the Bitcoin spot ETF and the inflows and outflows. And essentially what they're saying here is that over the last month or over March, the inflows basically matched the outflows. And if you guys have been following the spot ETFs, you'll notice that there have been significant outflows from Grayscale's GBTC ETF, and they've moved into like the IBIT for BlackRock and some other ones because the fees are so much lower over at BlackRock. So what they're saying here is that there hasn't really been much movement in March. There hasn't been a lot of movement either net inflows, rather it's been kind of neutral. So, and you can see here the assets under management AUM, that's kind of remained sort of sideways throughout the majority of March. Next, they talk about the Bitcoin not hitting extreme levels of exuberance, okay? So they specifically point out the MVRV score, all right? So this is the market value to the realized value. And what you're trying to see here is that you take the market value, which is the current market cap of Bitcoin, and you divide it by the realized value, which is kind of like the average of all Bitcoin cost bases. And you get this z-score, okay? And this is something I've pointed out before in the past. This is a really, really important metric to pay attention to see whether or not the bull market is over or nearing a top. You see here in the past, the z-score usually goes up here to this red line and then exceeds it. And so far, we haven't actually even gotten past the green line right down here. It's just kind of up and touched that green line and then fallen back down again. So Bitcoin is widely considered to be undervalued the closer it is to zero. And when it goes, I would say here at about maybe 6 or 7, that's when you know things have gotten wildly overvalued and the local top is near. All right, so the long-term holders have been taking profits. This is something I've talked about quite a bit as well, and there's a lot going on in this chart. But they have the supply last moved for the 5 years or so in red, and the supply last moved in a year plus old wallets in that purple. And like I said earlier, what this chart is showing you is that these shorter term wallets have been basically selling, and they've been taking profits. Okay, and the red line representing the wallets that are basically have held Bitcoin for about 5 years or so. Those have kind of evened out a little bit. It's neither positive or negative for them. They haven't seen net inflows to those wallets or net outflows to those wallets. It's been kind of close to that zero level, so it's been relatively even. And they're saying specifically that the 5-year outflows are a better indicator of the disciplined response to exuberance during the late stages of the bull market. They don't really pay much attention to that purple line. It's that red line there that they're looking at, the longest, I would call it the longest term holders for Bitcoin. That's what they're going to be paying attention to. So, long story short, this is pretty neutral. There's not it's not bullish nor bearish. Next, they talk about the 4-year annualized CAGR, the compound annual growth rate. Okay, and what they've seen here is that over the last 4 years, Bitcoin's CAGR has actually gone up to about 100%. It's at about 106%. So that's a really good return for a 4-year CAGR for any asset. And then they also point out the Sharpe ratio, which is a measure of risk-adjusted returns, and that peaked at 96% in March when Bitcoin was over 71,000. Now, they also say that this 4-year ratio tends to correspond with the halving. Okay, so if you guys are familiar, the halving usually happens every 4 years or so it would make sense. So far, we're looking at more room left to run in the Bitcoin price. You can see here that the 4-year CAGR actually went up to about a little over about 150% back in 2021 during that bull market, and back in 2019 during that bull market, it actually went up to about that level as well. So there's still some room left to run for this bull market. They also talk about Bitcoin scaling solutions and how those have expanded rapidly over the last year. They're saying here that specifically the Lightning Network has accumulated significant total value locked, and when you combine that with Rootstock and Stacks, it gets to a level of over 700 million US dollars in total value locked. And this tends to accelerate during the bull market. We tend to see that a lot of these scaling solutions for Bitcoin do tend to grow larger, and there's more money coming into these scaling solutions during the bull market. And ARK is just saying that it's basically it's going to continue. Now, if you're a fan of the idea that Bitcoin should be used as an actual money, as currency, then the rise of the Lightning Network is something that you definitely will like, because the Lightning Network gives you that ability to conduct transactions much more quickly and cheaply compared to just using the Bitcoin layer 1, or the main blockchain for Bitcoin. All right, so next they talk about the market narratives, okay? So they talk about the fiat currencies around the world. Specifically, they mention the Egyptian pound and the Nigerian naira spiking in relation to the dollar. And the reason for this seems to be the fact that the Red Sea incident, what's going on in the Red Sea right now, where the shipping is being attacked in the Red Sea, that seems to be the cause of the fact that inflation or the exchange rates have spiked so dramatically, and they're saying that it's going to hurt the dollar in the long run, or it's at least going to hurt these currencies in the long run. Next, they talk about the GDI and GDP. Okay, so many people are familiar with GDP, the gross domestic product, but there's also what they call the gross domestic income, and normally these two things should be fairly similar to each other. They should kind of move together, and really we've seen kind of a divergence between the two. And now, what they've said in the past is that the GDP continues to rise. However, the GDI was lagging, and so they kind of expect GDP to also come down in order to match that GDI, and that would previously ARC said that's very bearish. But what we've seen apparently in the past couple of months, or when they've been tracking this, is that the GDI has actually gone up to match the GDP. So now they're moving this to neutral as opposed to bearish. So I think that's actually a good sign, frankly. All right, now they talk about the S&P 500 earnings. So they take the earnings of the S&P 500 companies, and they look at them through a trailing 12-month, and they've basically determined that the earnings have plateaued. It hasn't really surpassed that level that it first established in November of 2022, and they view this as bearish because what they're saying here is that it's going to move down, and as the earnings move down, that means that the stock prices are also going to wind up moving down because they're going to be they're not going to be able to justify the current valuation because earnings are not improving. Okay, so they're also saying here that companies are likely to cut employment after hoarding labor in response to shortages created by COVID. So they're expecting an increase in the unemployment rate. All right, so that kind of concludes this whole ARK Invest monthly report. And just as a quick breakdown, they've really put out some really important points here, and that is that there are significant support levels for Bitcoin that we've already reviewed. I would definitely watch out for that short-term holder cost basis for that. That was, we go back through here, the short-term holder cost basis, 57,500. That's the level I'd be looking at. They also talk about the Z-score and the fact that Bitcoin's not overbought and it still hasn't hit those tremendously high levels compared to where it's been in the past. And basically they're saying that Bitcoin has more room left to run in this bull market. They've seen holders take profits, but it's not a significant level just yet, and especially those longer-term holders that have held for more than 5 years, they haven't really been taking profits. And then, of course, they go through the kind of bearish backdrop of the dollar and earnings for S&P 500. But I think that I'm not too focused on the bearish background for this because the markets have held up just well enough, and the economy has held up just well enough to the point where Bitcoin can still succeed as opposed to going into a deep recession. But overall, I think this has been actually a fairly bullish report, and I do think that ARK Invest seems to believe that there's significant room left to run for the Bitcoin price before we hit the bull market top. But leave your comments below and let me know what you guys think, and I will catch you guys in the next video.